Bill Baruch is with us. He's our market watcher of the morning. So I've got a slightly unusual question for you, Bill. I don't like to hear this kind of economic nonsense at a time like this. What say you?
Price controls, nothing good has come from price controls. I mean, I think overall that's going to end up driving prices higher. It's this type of attitude from the left that has come after big oil and is really ultimately become a tailwind upon reopenings in the tailwind to these higher prices. He thinks that these oil companies are not looking for profit and they're just going to lower the cost to the consumer. That's not going to be the case. These companies have been pushed away from investing and creating new oil, and that's where the prices are going to be driven higher.
Okay, when will this market rebound? And now, historically, you go back to like 1945 and you look at all military activity since then, and I believe that in 11 out of the 12 cases, the market rebounded within a month. Are we going to see the same thing here? Because that would be quite a rebound.
I think we're at some peak fear here, and markets really don't like uncertainties. But the reality is, as this war is unfolded, this conflict's unfolding right now before us, there is a bit of less uncertainties. We're getting knowns, if you will. I think that's going to be positive for the market. If you look back at the onset of invasions, that's an opportunity to buy and expect the market to turn higher. Sentiment is extremely negative. Sentiment has been extremely negative. I expect coming out of this, as we get a little more certainty, we move into the Fed hike, I think we're going to see this market rebound through the spring. And I think we're being set to near all-time highs July and August.
Say that again. All-time highs, July and August, like for the Dow, the S&P, NASDAQ? Really? July and August?
I do think tech can lead. I expect the S&P to be within a couple % of that record high and within earshot of it by July, August. I think inflation, the fears here of inflation is you hear the left coming at the inflation narrative with crude oil, with energy, those costs. I mean, they're not going away, but the other components are going to subside a bit. The rent factors are going to remain high, but other components are going to subside a bit, and base comparisons for inflation are going to be muted as we move into the summer. And that's going to be a catalyst for a sort of Goldilocks scenario that's going to bring equity prices, I think, near record highs.
But in particular, you think the big tech, which is on the left-hand side of our screen at this moment, Apple, Amazon, Meta, Alphabet, Microsoft, in particular, you think that they are oversold and they're in for a big rebound, correct?
Broadly speaking, yes. I think they're in for the big rebound. I think they can run the most. That's where the most value is at this moment. And we're starting to begin our ship rotating out of that value, out of that commodity-heavy cycle, and moving into more tech at this moment.
That's what you're doing. That's what your outfit is doing. That's very interesting.
That's what I'm doing right now, correct.
All right, Bill, great to have you on the show on a Monday morning at a time like this. We always appreciate it. And we'll see you again soon.
Thank you.
Thanks very much.